Guys, I welcome you to another session of the free class hosted by CF Trading Up. And in today's session, we'll be talking about what? We'll be talking about liquidity. So, yeah, let's go on. What's the first point? What is liquidity? So, liquidity means what? It means where buy and sell orders are what? Are available in the marketplace. That is what liquidity means. So, because large players, all these banks and institutions, they do what? They move price. So they need enough orders on what? On the other side to enter or exit their position because they have what? They have a very large volume of orders to not cause what? To not cause slippage. So before they can actually what? Enter and exit their position, there has to be a pool of orders on what? On the other side of their position to actually what? To actually fill their positions with. So you might not get it yet, but with time you actually get it better too. So since they trade with large volume, they cannot just buy and sell anyway. They look for areas where many orders have been placed before. So maybe stop loss orders are placed there. Maybe pending buy or sell orders have been placed there. But there has to what? There has to be orders at that particular place. So they feel their own their own position against what? Against those orders. So they need it as a collateral for their position. You can see it as a collateral, but that's how it is. So those particular areas that they want to fill their position with, like those particular orders, those particular areas where orders are placed, that they want to fill their own orders with, their own large volume orders, that they want to fill it with. Those particular areas are what? They are liquidity zones, they are liquidity pockets or liquidity pools. So, and price is often what? Attracted to them because that's where big orders can be executed efficiently. So that's one thing you want to understand. So these are all what? These are all theoretical, but you will understand it when you get onto the chart. So, and that is what moves price. So price always what? It moves toward liquidity. Price doesn't just move randomly. Liquidity is what? It's what moves price. By now you should have what? You must have heard of the concept drawn liquidity. So that is what drawn liquidity means. Price is always responding to liquidity because large participants like banks and institutions that are moving the liquidity, they are moving the market. They actually what? They actually want people. They actually what? They want orders on the what? On the other side of their position to actually what? To actually fill their position with. So definitely they will actually what? They actually be moving the market towards where the next liquidity pool is. That is what they will be doing. And that is why liquidity is what moves the market. That is why we have the concept of what? The concept of drawn liquidity. So price doesn't just what? It doesn't move randomly. So that's a quick definition for it. That's a quick definition. So what are the types of liquidity we have? We have majorly, it's not even majorly. In short, you just have buy side liquidity and sell side liquidity. I will say buy side liquidity, it means liquidity sitting above what? Above price, usually above what? Above highs. And what? When we say sell side liquidity, it means what? Liquidity sitting below price, usually above what? Above lows. So they can what? We can be stop losses order, break out buy orders and break out sell orders depending on what? Either buy side liquidity or sell side liquidity. So it can be sell stop orders in your buy side, sell stop orders in your sell side liquidity or what? Or sell orders in your buy liquidity. And you can what? The buy orders in your buy side liquidity or what? Or buy stop losses order too. So however, they are just what? They are just orders. So they are just orders sitting what? Buy stops and what? And sell buy side liquidity and sell side liquidity, they are just what? They are just orders placed on what? On each side of the market. That's just what they are. So and you can also what? You can also classify them into external range liquidity and what? Internal range liquidity. So for you to actually get it better. So I would have showed I'll go on to the chart now to actually show you some analogy so you can actually get what I'm saying better. So you don't get confused a lot about what I'm saying. Okay. So liquidity is a very vast topic when it comes to technical analysis, or I'll break it down to the simplest I can make it be. So talking about external liquidity, liquidity are what? Old highs and old lows. Old highs, old highs, old lows, old lows. So let me just mark them out over here so you can see. This is an old high over here. This is another old high over here. This is another old low. This is an old low over here. A previous low, old low over here too. So yeah, this particular old low has been taken out by this particular new low, but those are just what? Those are just old high and old lows. I'm just trying to make you know, okay, this is what liquidity is on the chart. So it's my what? It might be double highs, it might be single highs, it might be triple highs, it might be what? Double low, single low, triple lows, anyhow. So by double highs, I mean what? I mean two lows are the same what? two highs at the same level, and double lows mean what? Two lows at the same level. So it's like this. This is what? This is an example of a double low. You can see these two lows, they are what? They're at the same level over here. You can see, yeah. These two lows are what? At the same level over here. This is what? This is a double low like this. But you call it what? But you call it equal lows. You don't also call it double low. So that's how the about liquidity is and how it is on chart. Now talking about sell side and buy side liquidity. Any liquidity we see on what? Above market price like this are just what? Highs. Any liquidity that you see what? See swing highs like this are what? Are buy side liquidity. They are what? They are above market price. Not that they're actually above market price, but they are what? They are on the buy side. Like, how do I explain this? Yeah, there is no total explanation. It's just what they are above highs. Let me just say it so. They sit above highs in the market or above price. If price is actually not trading at this particular high yet, I think price is trading up. Yeah, price is already trading beyond this high right now. But before price traded above this high, when it was actually around somewhere around there, this high remains what? They remain above market price. So those liquidity that are above highs are what? Are buy side liquidity. And just like the opposite, liquidities that are above what? Are above lows are what? Sell side liquidities, or are above what? Are above price. Are below, no. Liquidities that are above what? That are below old lows are what? Sorry for the confusion. I'm very, very sorry for that. So liquidity that are above what? Above old lows are what? Are sell side liquidity, or above what? Liquidities that are below old lows are what? Are sell side liquidity, or below what? Or below current market price are sell side liquidities. Yeah. And above old highs are what? Buy side liquidity, or above price are what? Buy side liquidity. Yeah, you get the analogy. So I'm just not going into that. That is very, very confusing. So, but you get the gist. Now you get the gist. So just like this, you see this. Yeah, this is what? This is sell side liquidity and old low. Another old low over here. Sell side liquidity. Another old high over here. Buy side liquidity. And so on and so forth, and so on and so forth. You get the gist of where I'm going. So that's it about that. So those old highs and old lows, old highs and old lows are what? They are all your buy side liquidity and sell side liquidity. Old highs are buy side, old lows are what? Sell side liquidities. So yeah, that is that about what old highs and old lows mean. Now, external range and internal range liquidities. External range liquidities are liquidities that are sitting above major highs and what? Below major lows. Those are external range liquidities. Now, this liquidity over here, let me just bold in it so you can see it better. Let me delete the second one so it doesn't confuse you. Yeah. So you can see this liquidity over here. That high over there. That is what? An external liquidity quantity is what? It is sitting at a major high. Not just at a major high, but at an external high. You see, that's an external high. Because that's not internal. How do you see it as an external high? You see this is high. Apart from after the high was the safer. So it was what? It was left as an external liquidity. That is what? A major pocket over there. And just like this one, so this was an old low over here. You see, this is an old low over here. After this single low was from, you see price going up. So it is what? It is left as an external liquidity pocket over here. So, and this is what? This is an external liquidity. Also an external liquidity over here. Let me put in this one too, so you can see where I'm pointing to better. So we have external range liquidities just like that, and we have what? Internal range liquidities. If you want to get it better, by now I believe as a basic English student, you should know what external means and what internal means. So you should actually be able to deduce what I mean by that. So you can see it externally over here and externally over there. And internal range will be what? Something like this over here. You see this? Then you break it. So yeah, you see that. That is internal range. Here's also what? This is also internal range. And this is also what? This is also internal range. You can see those internal range. They fall in what? They fall in between what? In between the range. In between what? In between this daily range over here. This trend over here. Those are what? Those liquidity, the liquidity pockets over there what? Are internal range liquidities. But liquidities are left externally outside our external range liquidities. So I believe that explanation suffice for what I'm trying to explain over here. So just take it this way. External liquidities are what? Above major highs or below major what? Major lows. So there are what? Important structure levels. Yeah, these are like this low and that particular high. So And internal liquidities are what? They are inside a range or a trend. You can see this, all these ones are internal inside what? Inside a range. Inside what? Inside this particular up trend over there. They are what? They are just minor highs and what? And lows. Used for short-term moves. So that is what they are used for. So you can see the key. This actually chase what? To actually chase profits. To actually take your objectives. But external liquidities are what? Are decisive structural points. So that is that about that. That is the best analogy I can give for now. Because liquidity is a very vast topic. So, you keep on learning and learning about it. Yeah. Let me just leave it at that for now. Now, something else I should still mention about liquidity is where liquidity usually what? Where it sits on that. So I've mentioned that already. It is above what? Above equal highs and equal lows. Just like the old low I showed you initially. This particular old low over here that I showed you before. Let me just borrow it so you can see it better. It is above what? Above old highs and old lows. This is an example of what? An old low. But not just an old low, this is what? Equal lows. This is an old high. Everything we've been saying over is what? Are old highs and old lows. But this is what? What? No. This is what? This is a single low. This is a single low. This is a single low. Why is it single? Because just one single low is formed there. Without what? Without any other single low formed around there. This is also a single low. But what do you see here? These are two lows at that particular level. So that is what? That is equal lows. No a single low anymore. That is double lows, or you call it equal lows. That is it over there. But over here, they are not what? There's nothing, they are not equal, like nothing is on the same level with every other liquidities over here. That is what? That is why they are what? Single lows. So that is what? So liquidities are resting below those old lows. So trend line touches too. By now you should know the meaning of trend line. So this is a trend line touch over here. You can see. Let me put it in it so you can see it better. So this trend line touches, you can see this low over here, the first low, this first touch, this second touch that I marked over here, third, fourth, let's just say this trend line touches, it is what? It is connecting swing lows all together. So those swing lows is connecting all together are what? Are also liquidity pools. They are what? They are liquidity pools. So that is also what? That is also part of where liquidity can reside. Those trend line touches are what? They are connecting a pool of liquidity. That is where a trend line is connecting together. So range highs and lows too. Those are what? External range and external range on both highs and lows. External range liquidities on both highs and lows. That is what? Range highs and range lows. So previously high or low, just know liquidities are what? Old high and old lows. By now you should have gotten it already. Even all the everything I've been saying around it, no matter everything I've been saying around it, you should know it is what? Both old lows and old highs. That is what liquidity pockets are. And that is how you spot them on chart. They are everywhere in your charts. Everywhere in your charts. Old highs, old highs, old highs, old highs, old highs, old lows, old lows, old lows. So you just have to be able to consider, okay, is this internal range? Is this external range liquidity or internal range liquidity? That is what you need to consider. But it is always everywhere in your chart. So internal range are the most common. Even external ranges are. External range liquidities are also what? They're also always common. See, is external range, external range, external range, internal. So it is everywhere in your chart. So you can just what? You can just go through it. So no. So let's talk about what liquidity pools and what and stop hunts over here. After you know what the concept of liquidity is, that is the next thing to actually know. So a liquidity pool is an area on the chart where many others are clustered together. A liquidity pool is an area on the chart where many others are clustered together, and it usually happens at obvious levels where traders commonly place stop losses, breakout entries. Now that is where they are. Now examples of liquidity pools are what? Equal lows, just like the one I showed you right here. Right there. Let me put in it so you can see it better. So that is it over there. So equal lows or equal highs. That is an example of a liquidity pool. Range high and range lows. Those external range liquidity that I showed you, and the external range liquidity at the high and the low I showed you initially, those are what? Those are liquidity pockets too. This external range liquidity over here that I brought in, and external range high that I brought in over here, they are what? They are also liquidity pools. Clear support and resistance levels too. They are what? They are liquidity pools too. When you actually understand the concept of support and resistance. So an example is this particular trend line touches that you see here is what? Is a support resistance. So that particular support resistance, you can see it's connecting a pool of liquidity all together. So that pool of liquidity is connecting all together is what? Is a liquidity pocket too. That liquidity, those lows, it is connecting lows, this low, this low, this low. Count the lows, about 5 lows. It's connected about 5 lows on a trend, on a line touch altogether. So those are what? Those are liquidity pools too. And that is where example of liquidity pools, that is where they reside. So because institutions need large volume of orders to trade, they often what? They often push price into these areas to actually collect orders and what? And process. And this process is called what? It's called a stop hunt or liquidity grab. So now, how does this happen? This particular low over here, you want to see it out. Let me just, I think I saw an analogy. This analogy on 4-hour time frame. The one playing out right here. Yeah, you can see it over here. You can see it over here. Let me go on to the cleaner chart so you can watch. You can get it better. So now this is really clean. Very, very clean over here. So let me just use this so you can see it. So now see this particular eye over here. That is what? That is an external range liquidity. So you have an external range liquidity, a buy side liquidity. What did the market do? Market came here, hunt into this eye, that particular eye, priced above it. After pricing above it and what? And rejected instantly. What has happened over there? That is what? A liquidity hunt or a liquidity grab. That is what you call it. So price has what? Grabbed the particular by pricing over that particular eye. By what? By pricing over that particular eye, even a little bit. That is what? That is a liquidity stop. A liquidity what? A liquidity hunt or a liquidity what? A liquidity grab. So after that liquidity grab, what do you see happen? Price started making a what? A reversal towards the downside of the marketplace. So that is what? That is a liquidity grab, and that is how stop hunts are done. So when I say stop hunts, I can mean stop hunts can either what? Buy stop or sell stop. Buy stop also means what? What you understand as buy side liquidity is what? Is also buy stop. And what you understand as sell side liquidity is also what? Sell stop. And I believe I have explained the meaning of buy side liquidity and sell side liquidity before. So these are just what? They are just basic stamps. No, there is nothing special about them. There is nothing special about them. So this is what? This is a buy side liquidity hunt or a buy side liquidity what? Grab or a stop hunt or whatever you call it. They are all what? They are all those terms. There's nothing about it. So a stop hunt does not mean what? It does not mean the market is manipulating small traders. No, that is what some of you understand, but that is not what it means. So most of you understand it to be manipulation of small traders, but that is not what it means. No. That is not what a stop hunt or buy sell or buy or a stop hunt or SIP. It has different terms according to what different traders. Some people call it stop hunt, stop grab, stop sweep, buy side liquidity sweep. Anything you call it is all what? Is all the same. Buy side liquidity, sell side liquidity sweep. It's just what? It's just price clearing the liquidity. That is just the meaning of it. So, but it is not what? It is not markets manipulating small traders. It means what? It means big players are using available orders to fill their own positions. Like I told you, the meaning of liquidity is. So over here, that would mean big players are what? They are driving the market towards what? This particular buy side liquidity. They want what? In order to offset their what? Buy side position. In order to offset their what? Buy positions over here. So by offsetting their buy positions over here, they will sell it to willing sellers as what? At this particular eye. Willing sellers and willing buyers. Willing buyers are what? Willing buyers that want to buy above what? That want to buy a breakout over here. And willing sellers are what? They are willing to what? Sell positions over here or place their stop losses over here. So I don't know if you get. I'm trying to explain the concept of what the liquidity I defined for you earlier, what it means on chart. That is what I'm trying to explain. That is the analogy I'm trying to explain to you. Buy orders. This buy position that you see coming up over here. The market is running up over here. By running into this liquidity, they offset all the buy positions for what? For willing participants, willing buyers and willing sellers over here. Willing buyers that want to buy the breakout of what? Of this particular eye. And willing sellers that want to what? That put their stop losses there or want to sell the market from this particular eye. So liquidity, different traders explain liquidity in what? In different contexts. There's this concept over here too. I can tell you in another way, two things are happening over here. neutralizing liquidity and what? And engineering liquidity. But I won't be talking about that just now. I'll be talking about it in what? In the next section of this liquidity topic. Because liquidity is a very, very what? A very, very vast topic. So I won't be talking about it right now. I'll be talking about it when I want to what? When I want to teach you how to what? How to trade using liquidity. That is when I'll be talking about neutralizing liquidity and engineering liquidity. But by now, I believe you should be able to get to a certain point what liquidity is all about. Yeah. So now after that, another thing I should mention right now before I finish this is what liquidity sweep actually is, and that's what I've been saying to you. So what it looks like in price is what it looks like in price. You can see what it looks like in price already, and what week versus body close explanation. So it's something you actually need to know too. So when I see a week, you see something is a I over A. After price, after price. How do I put this? After price moved into this particular eye, you saw an instant rejection and a body close below what? Below this particular level, this particular old eye. You know, the old eye is what? The level is what I marked out by this what? By this line over here. So after price moved above that particular eye, it closed below it. The close below it tells you it what? This is what? This is a liquidity sweep or a liquidity hunt or a what? A liquidity grab. And they will what? There will be a reversal after. Whenever you see a body close above what? Above a liquidity level, that will mean price might what? Price might want to continue higher. So in that case, that is what? That is a liquidity run. That is not a liquidity sweep. So it can either come in two ways. Let me just mark out the analogy so you can get it over here. So it can happen like this. So this is an old eye. It can either happen like this, clear the old eye and what? And start reversing. Or like this. Clear the eye, but not just clear the eye and what? And continue going up. So in this case scenario where it actually did what? Where it cleared the eye only. Yeah, in this case scenario where it what? Where it's cleared the eye and reverse. This is a liquidity hunt or a what? A liquidity grab or a what? Liquidity sweep. And in this case scenario where it was cleared the liquidity and continued moving up, this is a liquidity run or a liquidity what? Or a stop run or a what? Or whatever you call it. This is a run, this is a run, and this is what? This is a sweep. That's just the difference between the two. Because there are different things for all this stuff. So, and that is how you spot it on the chart. And as you can see here, this is a liquidity sweep example. This is also what? Another liquidity sweep example over here. This eye over here. Maybe stay with me over here. Yeah. That particular eye, what do you see happening? After price, let me just clear this. That was what? That was the previous external range liquidity over here before what? Before price cleared it with this eye, with this new formed eye. And after this new formed eye is now the external range liquidity over here. Price cleared it again with this what? With this eye again. And now, where will be the external range liquidity over here? This new eye formed over here again. You can see this eye formed, this eye took it out. This eye that took this eye, that took the previous eye out, it has been taken out again by what? By another liquidity sweep. So liquidity sweep is what? It's taking out those particular eyes and reversing and reversing and reversing, and so it goes. So now, see another example of a stop on over here, or a sweep over here. After price cleared into what? Cleared into this eye, what happened? Instantly it's closed below that particular eye. And what do you see happen after? It started the second time, but that's not really meaningful. After stabbing the second time, what happened? You see it's reversing for downside prices. You see it go down. You see it's going down. Went down beautifully. And that's it, you can see it over there. So that is a liquidity run. That is a liquidity sweep. And for a liquidity run, it is always in your chart too. For a liquidity run, the example is always in your chart. So let me just use this self-side liquidity as an example. Internal ring liquidity, this is an internal ring liquidity. What do you see happen after? After price cleared that particular liquidity, what do you see any form of reversal? Reversal? No. Price continued moving lower. That is a liquidity run, and this is what? A liquidity sweep. So the major difference is whenever you see a liquidity run, after price clears that liquidity, what do you see happen? Price continues moving after clearing that liquidity. But a liquidity sweep, whenever price clears that liquidity, it starts reversing. So that is the major difference between the two. So to not make this too long and so you can digest it, I'll limit it and continue liquidity in another session. So good day guys and see you next time.